morning, guys. Uh, Welcome to my YouTube channel. This is Evergreen, the CEO of Evergreen Billionaires Trading Academy. This morning, I want to share with you some of my secrets that I use in trading VIX indices or index and boom and crash. If you look at the chart very well, you understand that I have only one single moving average, and it's an exponential moving average, the EMA 50. There's nothing more than that on my chart. So the question is, why did I place this trade? You can see this is a small account, trying to grow a small account, right? So how do I analyze the market and know areas of value, areas that are strong, the market can hardly break, or the market can bounce off from there? It is important to know this. So how do I do it? I am a swing trader and also a day trader. And of course, I first of all go to the daily chart. Now, how did I do it? Let me show you something. This was the first move, right? And the market drove down to this point. It moved back up here, created a higher high, but couldn't still break this area. Came back down to this point, retesting this area, and went back up, but couldn't close above here. Now, yesterday's candle is this and close engulfing candle. And remember that there's always going to be a 50% pullback. And I waited for the 50% pullback this morning to go to this from here to this point. That's where my stop loss is. And now, as I saw this, I go down to the H4 time frame. This area is meant to be considered a strong area which has been tested several times. Okay, and now roll down to the H4 time frame. Can you see what happens? These are the pullbacks on the D1 you saw. The move to the up, the pullback, and here the move to the upside, the pullback, move, and passing move. And also, this would have been a correction if it hasn't broken this level. But when I saw this move, if you're using RSI, this is divergence, right? And on the daily time frame, this from here to this point is an engulfing candle. And this is what happened yesterday. Okay, so now what happens here? This is an important area. This area here you're seeing here is an important area, and this is a 4-hour candle that formed yesterday, another one here, and then if you go to the hourly time frame, you will see what I'm saying. Can you see this? This is a formation, this is a pullback. Now, you ask me, why did I place my trade here? I was waiting for the close of this candle, because this is a week on the daily chart that went back up. And you can see the market came back down here, pulled up, created an impulsive move, corrected itself, and gave us a strong rejection at this level. Alright, and then you had a strong rejection here to the downside, showing selling pressure. Okay, and this is another strong rejection from the upside. And I waited until I had a confirmation of this close candle. And then from here, I was doing something else. Before I came back, the market has gone downward. And I took my entry. Look at my stop loss here. Now, the question is, how did I know that the market would go down? First, this is a minor level on the H1 time frame. Let me bring this line here. You can see it. There's a minor level on the H4 time frame. Okay, there's a minor level. This is how I draw my levels. Alright, but you can't see this in clearly except you use a line chart. Okay, there are areas of value or interest, support and resistance, areas of supply and demand. Okay, but you won't see these areas very clearly until you use a line chart. Let's turn our chart. You look at this very well using the line chart. Can you see it? My line chart, the market came and bounced off from this area here. You can see this area is the area of value. The difference between the line chart and the candlesticks is that the line chart does not show you where the height or the low of the price or the extent the price goes to. It's only the open and the close. Okay, so here now you see that this area was an important area. The market broke and came back. Why didn't the market stop here? No, the market has to create a level, which it has broken and created this level here, forming an M, a small M. You can see this M, right? Came back now, has to create another level. These were small minor levels that the market created while it was going down. Okay, so the market has to create a level to show that it is absolutely going down now. The trend has changed from the upside to the downside. Right, so you can see that from here, if you're using a trend line to find out what I'm saying, you will see that you apply a trend line here. Look at it. Reasons for this trade. You can look at it, right? So you have every right to take a trade from the point from here or here, but I wanted to have a confirmation of a bullish, bearish pressure or sentiment before I go into the trade. That was the reason I had to wait until the 1 hour candle closed, though I had a strong rejection from the upside. All right, so if you make an entry here, what should you be looking at? The profit. The first thing you should look at is here. But when I came here, I saw that the market could not hesitate at this point. The market could not just do any sign of, like we're not breaking this area. So I waited to see if the market will break up. The market broke downward and it's still going down. You can see that. So if I'm expecting now the market to pull back to this point, and I'll add more positions. You can see that it's just very easy. Structure is the best thing you can ever price. Just deal with the price. Whatever happens, if you understand that the market will pull back to this point, you will not close your trade. Only wait the market pull back, because this area has been tested 1, tested 2, and you can see here there was some activities here. Now you see that the area was tested twice, which means it's a strong support level that will become a flip zone, which is as resistance if the market pull back at this point, creating this level. If the market pull back here, now it may touch this level, it may not touch, it may stop here, somewhere here, right, and go back down. Do you understand? So these areas are quite important if you understand them using the line chart, and then going back to the candlesticks. You can see what is happening here already. You can see the rejection candle here. and then the 50% retracement from here back to this point. This is more. This is about 61.8% retracement on candlesticks. I don't need to take that trade, even though I want to take that and a sniper entry. Fine, I'll go down to the 15 minutes and do that. But no, I had to wait for a close of the 1 hour candle, which was this, so as to have a strong confirmation of the break of this region, this area of value. Okay, you can see that the market came here, gave a small wick here, but it was not a strong wick, so allow the market to break down. You can look at where my take profit is down to this point. Why did I place my take profit at this point? Because I'm sure if the market bounce but did not bounce off from here, going back to retest this zone, or it bounce off from here, go back to retest this zone, I'll be waiting to make another entry at this point or at this point, right? And then the market will come down to this point, of which I believe that if on the daily chart the market wants to go down, it is going to get to this point. Get to this point. And that will happen when I know what happens here, because this area has been tested here, and tested here. Even though broken, but still came back up, bounced back up. You understand, guys? So this is how to identify using just the price to know your entry, your exit, your take profit. You enter the trade. Sometimes a lot of people fail because they don't know where to put the stop loss. The levels in the market create stop loss itself. You don't have to bother about it. You can see this an area you should know that there should be a stop loss. Now the market comes back here and then creates another level, which somewhere it may be somewhere here. If you're expecting that your stop loss will be above this trend line, this line here. Okay, so this is how we get value in the market. Okay, you can see that there are areas of supply and demand, which I'll be going into in our next video. But for now, guys, take care.